Hey, welcome into the live stream today. There's going to be a couple things we're going to cover, and that, of course, is going down the rabbit hole of how the Fed banking system and what this is going to look like for crypto banks, neobanks, all of that good stuff. We'll dive in deep. My name is Paul Barrow. Welcome back into Tech Path. Let's get into it today because when you look at the future of crypto, there are really kind of two factors that play into it, and both of them involve somewhat of either the Fed itself and or the Federal Reserve. So you've got a situation right now that really is kind of starting to become, I think, more noticeable in the sense of how the dominoes are starting to play out. And there are some scenarios that play into this in the hands of where the Fed is going. All that good stuff, we're going to dive in and break it down for you guys. I do want to thank our sponsor today. That's, of course, Bybit. If you guys are looking to go in and really kind of leverage up right here and do some trades, whether it's swing trades, maybe you're going in and looking at, a much more active trader position. Bybit is one of those tools that is absolutely great for this. And of course, you can get some great benefits by using our link below. They've got a couple of features out there in as well as ways for you guys to actually utilize some of this cash, use it in your own account, and make money on it. So it's going to be easy to do. Check the link below. It'll go into all the details of how it works, but up to a $500 bonus on your trades. All right, so let's get into it today. Around the Federal Reserve, first of all, I want to get into the structure of the Federal Reserve and a little bit of how this works, because this is becoming a very unique situation in the sense of, remember, two things are going to have to happen for crypto really to become the next level. All right, when we level up and really get to a point where it is mass adoption, there is going to be a big factor here that really kind of ties into the existing banking system. And what I mean by that, we've talked about this before many times, is that at some point, existing banks will have the capability of holding in custody crypto, and the likelihood of your Bitcoin, Ethereum, and many other tokens that most likely will come onto these platforms, banking platforms, and enable you to trade them or create an account, much like what you do right now with, in some cases, many securities platforms, banks that offer securities offerings. But if you look at the Federal Reserve System, just to give you guys kind of an overview of how this thing works, it's a pretty straightforward system. I think is a little bit stacked, but basically you have the central bank. This is the Federal Reserve System itself. You have three key entities here: the Federal Reserve Board of Governors, then the 12 reserve banks themselves, and then the Open Market Committee. That's kind of the management team, so to speak. Then, of course, you've got functions of what they do. One is conducting the monetary policy. They help maintain the stability of the financial system, obviously, because they're managing the trust and management of so many banks overall, which report to each one of these Federal Reserves. And then they supervise and regulate the financial institutions themselves. And then they foster payment, settlement, system safety, and efficiency. We're talking about things like SWIFT, all those kind of scenarios that help kind of run the overall monetary system. And then they promote consumer protection and community development. That, of course, gets down into the aspect of kind of protecting you as a depositor in one of the banks out there that have FDIC insurance. So with all of that in place, the question is, how are they going to set up the guidelines for crypto banks? What is this going to look like in the oncoming future? And one of the biggest states out there has been Wyoming that has kind of gone in this direction. And this is going to be kind of the question mark of a lot of people of whether or not this will be good for crypto banks, or are they simply paving the way for the traditional banks to come in and sweep up the crumbs? This will be interesting to watch for sure. If you don't know the breakdown, here is a breakdown of the actual reserve banks themselves. And, like where we are, we're in the Southeast. So you've got the Federal Reserve of Atlanta, you've got the Dallas Fed, etc. And all of them: Boston, New York, Philly, Cleveland, Richmond, Atlanta, Chicago, St. Louis, Minneapolis, obviously, Kansas City, Dallas, and San Francisco. So the whole point behind these is they kind of run the banks in their own entity or in their own area. And the guidance behind this is that they essentially are making a decision whether or not you're certified as a bank charter, whether or not you can kind of come join the club, so to speak. And that is really kind of the factor here as they start to set up what is going to be dictating the growth of any kind of crypto investment in the future. I want to get into a couple of other things here, and this Fed site's a little interesting. Um, there's one section right here. Let me zoom in on this one right here. So directors serve as a link between the Federal Reserve and the private sector. That's you and me. Obviously, as a group, directors can bring their duties a wide variety of experiences. Private sector gives them invaluable insights to economic conditions. And overall, Reserve Bank head office and branch directors contribute to the system's overall understanding of the economy. So in essence, they work kind of in lockstep with what's happening within the Fed itself and then the Federal Reserve. And in essence, all of this starts to play in, to me, of what I look at when I see these kind of systems being built, is a stacked deck. And it really starts to change the direction of, in many cases, how some of the markets will develop over time. So here's a quick article that kind of breaks this down a little bit closer, I think. U.S. Fed opens pathway for crypto banks to tap central banking system. The central banking system, obviously I just explained, is how these systems would enable different banks, neobanks, crypto banks to kind of move in this direction. If you kind of look at some of the banks that have had a failure, if you want to call them banks, I think you would have to include Celsius in this look. You'd probably would have to include, to a certain extent, Voyager, that were and trying to become essentially crypto banks. Obviously, they didn't have the charters in place, but this, I think, has also given fire for the Fed and the Federal Reserve to essentially start building in a framework of what this means for you as a crypto bank or any kind of entity that's starting to develop in this direction to get a pathway into the overall system. Now, there's 3 tiers, and we'll break down each one of them of how this works, but this was the guidance or in a statement from Lael Brainard, which is the Fed chair. The new guidance provides a consistent and transparent process to evaluate requests for the Fed Reserve accounts and to access payment services in order to support safe and, basically a payment system. And then, of course, the guidance also is going into what is proposed, as this was actually proposed in 2021, that will create a multi-tiered system allowing the Fed to adapt its evaluation process for granting access depending on what kind of financial institution is applying. So this gets back to the point of where these crypto banks, I think, will get shut out. And they kind of actually give you this already in the framework of what this is going to apply to. So if you look at their guidance under Tier 1, banks would be federally insured. Tier 2, banks would not be federally insured but are still subject to supervision. And then the third tier consists of firms that are not federally insured and not subject to prudential supervision by a banking agency. And this would most likely apply to the Wyoming crypto banks. So this gets to the point I'm getting at, is that what we're looking at is a scenario where the Fed may be setting up the existing ecosystem of banks in general to truly go into this. In other words, there may not be room at the table for some of this development in terms of crypto banks that could really move on to this level. The question will be, do they start to do things that could enable them to essentially kind of come to the table, also meet some of the regulatory requirements from the Fed to actually kind of jump that chasm and become part of the good old boys club? So you look at a couple of things that they kind of stated. Many comers that were talking about this recommended that the proposed guidelines should provide more challenging path for institutions with novel charters, this was talking about crypto banks, to gain access to the services, that they're essentially providing today. There's nothing novel in terms of factors that they include here. It's exactly the type of thing that the Federal Reserve is looking at in terms of risk, the reserve itself, risk to the payment system, or risk to the economy. Again, they're still looking at this as a factor that will continue to provide a lot of risk. And of course, the Celsius scenario, what we've seen here within the crypto ecosystem over the past, 6 months, has given them fuel for the fire, I think, in being able to set this framework up and really start to kind of put barriers around the whole banking system that could allude to a point that pushes more of traditional banks into the lineup of what's happening within crypto overall. So I think a lot of this is going to come down to, one, how much the crypto banks actually fight back, and also to a certain extent, how the existing banks will start to integrate more and more crypto utilization and more services, which I think are coming. Obviously, we've seen JP Morgan, we've seen BlackRock, and many others that are starting to kind of move in this direction. TD Bank, there's been several. I myself even had a chance to talk to some guys at Ally Bank that were even talking about more in the direction of digital assets. So I'm seeing more and more of this because they, in most cases, these banks, these traditional banks, have the capability of get you into security system. You can start doing investing, things of that nature. What keeps them from being able to jump immediately into the exchange business? And that'll be the question mark that I think will start to drive and trigger where the future of this goes. I want to get into this piece right here because this kind of showcases something that happened at Celsius, and these details continue to kind of pour out of what is happening within the bankruptcy court, and they're revealing some very, very shady activities. Obviously, if you look at where Mashinsky was going, some of the things that they kind of focused on, these are the things that are just recently coming out. This, of course, is coming out of some unnamed sources. Don't know who those are. Always kind of question mark when I see unnamed sources in it. But essentially, that Mashinsky was kind of set up that he was worried that crypto prices would suffer if the Fed started hiking interest rates and decided to overrule the senior traders with decades of experience. So he kind of took the book over on himself. They also claimed that he ordered the crypto lenders trading team to sell hundreds of millions worth of Bitcoin, and the firm bought back funds the following day at a loss. This is about 50 million throughout the trading just in January alone. These are the kind of things that was going on within the Celsius team, and I think we'll continue to see more of this. So this gets back to my point, is that with fuel like this, these are the exact kind of scenarios that I think the Fed and also the Federal Reserve are going to be able to reserve or kind of point back to, and simply looking at the kind of the shenanigans of what's happened out here within the crypto markets to say we need a different kind of structure overall of how this is going to be integrated into banking. And this is where I think it comes down to is whether or not the public trust is going to look at traditional banks or neobanks or crypto banks as really kind of the future. The real question is going to be whether or not the Fed puts enough pressure onto the crypto exchanges. And that is something that I think is coming in a very, very fast fashion. I saw an article, one of the staffers, I think from Senator Loomis, was talking that the Fed, the SEC, had already started to initiate investigations in every major exchange in the United States, plus Binance. And when you look at that track, along with the fact that we have kind of lockstep over here with the crypto banking institutions being looked at as, okay, you're still at kind of an arm's length. We're not necessarily letting you into the game yet. All of that will start to play into, I think, what is going to be the future here, and that is structured finance and structured banking systems moving into this. And if you look at some of the other little, nuggets that are kind of starting to showcase themselves within the overall, news landscape, it starts to make you ask a few questions. If you kind of look at just this tweet here, it kind of points into some very interesting things. CEO Celsius, free and rich. CEO Voyager, free and rich. Sifu, free and rich. Do Kwon, free and rich. And then you got Tornado Cash, which was a developer who actually was arrested. And this is something, of course, being an Ethereum mixer. The whole scenario around this is the fact that we are looking at maybe an agenda here. Is there an agenda in place that could be pushing into a more powerful, more prominent position overall in the crypto ecosystem where we are going to see more and more structured aspects of this? Now, there's a few interviews I want you guys to listen to. I'll play a couple of videos to get into this. I do want to get you guys to drop some questions in on the sidebar. We'll try to get to as many as we can. Make sure and hit smash the like button. Love to kind of get your feedback. Do you like these kind of breakdowns? Is this some of the stuff that you would like to take a look at? Because obviously this has a big effect on not only adoption, I think more so on adoption, but more importantly around regulation. And regulation is going to be the gateway into crypto. It's right now we're at a very unique time because of the fact that regulation is so close. It's kind of on the doorstep right now. Then you've got a lot of undetermined positioning that I think is still up in the air. And this could fall either way. It could fall in the favor of some of the crypto market space. And it could also fall, I feel, more and more into the existing ecosystem, how banking and finance is run. And this has been the thing that has been the pushback, I think, of almost every Bitcoiner out there, pretty much anybody that really believes in cryptocurrency and, the alternative monetary system, that there's a lot of pushback on that. At the same time, you kind of want this to occur because you need and want just more people to know about this amazing asset class. And the way that's going to happen is most likely going to happen through security, regulation, and some sort of alignment with the existing powers that be. So I think that is going to be the big one. This was another big knock on the industry, and this was Celsius' $750 million insurance was also a lie. This claims it's intentional deception. These are the kind of practices that if we see this in the traditional banking ecosystem, these would actually be, I think, in a scenario where we start to see a lot more litigation, but more importantly, it would affect a lot larger amount of audience. The interesting, or customer base. The interesting thing with Celsius, even though it was a big player within our own space, remember, we're only $1 trillion market space, and even at our best, around 2 trillion, even in that kind of scenario, Celsius, and depending on which number you look at, their actual impact in terms of investors was fairly low in comparison to the top tier of what we see in the traditional market. So it may be one of those things where you kind of sacrifice the small amount of cheese here to really kind of go after the opportunity to kind of say, hey, this was something that happened over here, even though it was a very small fish in the big pond, and start to restructure how the Fed and how they structure overall the banking system to be able to make its way into cryptocurrency as a whole. And you guys have seen me report on this a couple of times, where we've really broken down some of the things around how banks, institutions will be able to structure this. And we had a chance to talk with the Mintako guy, and I keep coming back to this interview with him because he said some very interesting things around the adoption curve of traditional banks, their deal with Citi, but also around the fact that many of these banks were further into the development in terms of integration into crypto than I think a lot of people are recognizing. And I think we are about to see in this bear market, I think this is the time we'll start to see these kinds of integrations start to occur. Because remember, this is the best chance for them, meaning the traditional banking system, to be able to enter. BlackRock has already kind of showed their hand. We've started to see this implementation start to occur. The likelihood is this is the timing that all of this starts to play itself out. And of course, regulation will be a big part of that. So a big one for sure to keep an eye. This was kind of the point that I was making earlier, is crypto crackdown, SEC Treasury reportedly investigating exchanges. This is just, obviously, we already know the Coinbase scenario. This was several months ago, all right? Back in July, a month ago, I guess. And the whole point is that with Senator Loomis talking about this, is that there's more pressure that are continuing to push. So the likelihood is we're going to start to see more and more SEC reveals of more exchanges getting tapped on the shoulder. And the reason for that, again, gets back to the whole point of if exchanges are having and struggling with this scenario, and if we are dealing with so many banks right now that have already entered the security space, what is to keep those banks and structured entities that already have either publicly traded and or they're fully licensed and or welcomed into the Fed system, what keeps them from being able to take over the torch when we see these exchanges start to get those kind of black eyes that create a little bit of the same kind of thing that happened with Celsius, which is retail investors saying, I heard about this one. I think I'll go with, Wells Fargo. I think I'll go with Ally Bank. I think I'll go with whatever XY bank you want to look at that would essentially be starting to move in this direction. Now, why is this a good thing, bad thing? I think it's good for adoption. I think it is bad for creative applications within the finance system and really being able to truly get into the DeFi market ecosystem, because I think the crypto banks will be the ones that create a lot of innovation in that space. And if they don't have the ability to compete, then there's going to be no pressure on these banks to truly come out with new assets. And what I mean by that is new asset innovation, how you're utilizing the tool set to be able to go out and earn money on your money. So that, I think, is the downside from a consumer standpoint. It's probably one of the things that I think, is the bad side of this. And it is, you're going to have the good, the bad, and the ugly with this in the scenario of regulation and adoption. I think a lot of this plays out in the very near future. I think we are in the times right now where the early stage movers are already making plays, and they need these kinds of scenarios to be in a position to where they can essentially start to grab and become a little bit more powerful, meaning existing banks. Let me jump to something that Kevin O'Leary's talking about, and he kind of hits on it. Kevin O'Leary says sovereign wealth funds want Bitcoin. This gets back to the whole point of his area around acceptable investments included in each sovereign wealth fund vary from fund to fund. According to Swift Institute, top 3 sovereign wealth, this is Norway Government Pension Fund, China, Abu Dhabi, etc. The point being is that these guys are not going to be going in to existing systems that don't have security, aren't part of this overall ecosystem. So he's right in the sense that this is going to be one of the gateways into how the future of banks move into this. And I think, when you look at it just a year ago, I don't know that there were many people really understanding just how far the banks had really come. Obviously, we're starting to see this play out right now in front of us, and I think we're going to see more and more of this. Here was another quote that he said, when you ask him if you could buy a digital asset, which one would be on the allocation? It's about 50 basis points on the low end, up to 300 basis points on the high end, and 99% of the time they say Bitcoin. So again, back to the whole point, Bitcoin most likely will be the one that leads out, obviously not a security, most likely a commodity, and this is going to be the one that essentially becomes the component, the trailer that really kind of takes out the show of where banks are going to start to integrate. I think what we're going to see in 2023, we'll start to see major banks offering the security of basically holding your Bitcoin. And that, I think, will start the process of major adoption as we start to see this move forward. Now, right now, if we had a policy on Bitcoin, I swear the price would be $60,000 in 2 weeks. This is back to Kevin O'Leary saying these are the kind of things. He was talking to Anthony Pompliano. They talked about policymakers getting their act together and the regulatory step. But remember that the regulatory scenario has to play through where the money goes. So if you do follow the money in the lobbying communities, banks are obviously one of the biggest lobbyists out there. And the likelihood is this is an alternative path for traditional banks to be able to get their way in. Because remember, very, very few. We talked to Vast Bank. It's now been over a year since we had the Vast Bank team on. And even that team was promising a lot, but had not made the full leap into crypto assets, even though they did have the capability of holding crypto assets and giving you the functionality. We should probably check in back with them and see how far they've come. But that was a very small regional bank. And they themselves probably didn't have the resources in place that, when you look at someone like a TD or an Ally or others like that, Wells Fargo, et cetera, that are kind of on the crypto friendly list. So I think this is definitely kind of going in the face of where O'Leary is talking about. And let me get to a cut here from the Crypto Banner team, because this was on an interview with Rand and Raoul Paul and Kevin O'Leary, of course. Let me cut to this video real quick and listen to what he's talking about here, because I think it's a really important point.
Do this and make it a standard for their own sovereign wealth before the SEC gets a chance to move. And the reason for that is really political in nature. The largest manager of sovereign wealth in the world is BlackRock. That's Larry Fink. He's not going to do this until he gets the go-ahead from the SEC. And so they're not going to ever mess around with their largest manager. And Larry's telling them, and I'm speculating this, okay? I don't know this for certainty, but he's saying, let's just wait. Because when we get the SEC to approve this, whatever approval it is, and we'll build you the infrastructure so you can market it so that you're staying compliant in your mandates, then they're going to put on their waiting. And so I think this thing is going to happen after the midterms, after we get the policy unstable. They're going to start looking at Bitcoin. I don't know which regulator is going to get to regulate it because there's a turf war going on. But if you're a speculator and an investor, like the three of us are looking at this, and you, both of you guys are so down the rabbit hole as I am, I need to be there ahead of this decision, because it'll happen quickly and you won't be able to put on your position, and the market will move against you so fast. I am extremely optimistic on Bitcoin and Ethereum over the next, call it 24 months. And the way you should measure your enthusiasm, or curb it maybe, is they struck down the Bitcoin ETF just weeks ago, even though the Canadians have one. And I believe that the OSC, which regulates the Canadian ETF of Ethereum, which is mark to market real Bitcoin each day, okay, they basically are the petri dish for the SEC. They work so close together. In Canada, for example, you know how Coinbase is at war with the regulator right now. There's a company called WonderFi with 700,000
All right, so you can kind of see his point is very, very evident that the opportunity here, I think, is a wait and see. Regulation is going to play into this. The bank application will start to play into this because there is going to be an open market run, I think. And I think O'Leary is correct, is that most likely, if you play this out, if you're investing right now, if you play this out in a wait and see kind of mentality, you're probably going to miss it because it is going to move quickly. The minute we start to see any kind of indication moving in this direction, I think it surpasses any kind of pressures that we see from a macro standpoint. Now, granted, could this take another 12 months to 24 to really materialize? Yes, absolutely, it could. But the likelihood, if you're watching closely, is watch how these pawn moves are being made right now, because BlackRock actually took their pawns out into the board over these past few weeks. And I think that was the first signal that started really showcasing where the Fed is most likely going to be going, what the Federal Reserve is going to be doing in terms of approval for banks to being involved into this, and then also these sovereign wealth funds that obviously just need a pathway to get to this asset. And then again, we're talking about major accumulation opportunities and big time creation of wealth, which is what you guys are all about here. Now, you look at a statement here. I want to jump over to this Cathie Wood here. And this was just a tweet real quick. You know, it was kind of just reiterating what O'Leary was saying. But he's saying, listen, it desperately needs policy right now. And I'm in total agreement with him. I don't think there's a scenario that anybody would not agree, but it needs to be smart policy. And I think the concern I have right now with the Fed side of things, when the Federal Reserve side of things, is that we could see a little bit of a stranglehold on the market. And it seems to me like it's the Medusa right now. There's just a lot of tentacles that are working against, but at the same time for the market. When I say the market, meaning the crypto asset market, obviously we have a lot of pressure on the exchanges. We're going to continue to see that. We've already seen what MiCA has done in Europe, what that is going to look like. Likelihood is we'll start to see, which by the way, we've got a new regulatory body now that's playing out in Europe that you guys heard me talk about a lot here, is I think we may see a digital asset regulatory body actually evolve out of this, which could most likely kind of sit between the CFTC and the SEC. Again, another good thing that could help really accelerate this. I want to jump to the last video here, and then we'll jump to our poll and get some questions in. This is a just a quick run on what Cathie Wood has to say around the Fed, a little bit about the economy, where she's going, but also remember she was one of the big investors in Coinbase, and that in itself goes back to my point of are the exchanges under attack? And let me listen in to Cathie Wood.
That the insider trading was announced. That's not why we sold it. Actually, it was Coinbase who surfaced or exposed what was going on there for the SEC. But the SEC did weigh in and say, we think that at least 9 securities, I think it was nine of the crypto assets on Coinbase's platform are securities. So there was just a little bit more uncertainty. Okay, how many of these will they have to delist if they decide not to register with the SEC, or if they register with the SEC, how will that change their business model? So you saw that we sold very little, but we did it, we were in a day where the markets were very volatile, and Shopify was down 15%. A little bit of a thesis risk increase in coin, so we swapped some. It was maybe 20 basis points, not a lot. In terms of GBTC, well, we started in 2015 when Bitcoin was at $250. So that gives you a sense of how low a cost base we have. And we've continued to hold it. We wouldn't, I don't think we could use BitO and MicroStrategy. We want the underlying Bitcoin.
So you can
Cathie,
kind of
the
see
key
the
debate
whole
on Wall Street,
component
what
there.
everyone
Let me
is
kind of kill
discussing.
that feed real quick. So you can kind of see the point of where she's positioning, and this gets back to the whole, really kind of the whole assessment of what's happening in the marketplace right now. Is we are dealing with a lot of pawns coming out on the table, maybe for the first, well, definitely for the first time. We've not seen this before in any past cycle, and it is, I think, the one that is going to make the difference. Now, many people looked at, what we saw in 2017, obviously now in 2019, 20, and 21, the evolution of what we've seen in the marketplace around everything from gaming, NFTs, all those kind of growth sectors. But I do believe that the critical assets, meaning the top tier crypto assets, Bitcoin, Ethereum, most likely are really going to start to lead this out. The other factor that plays into this is that, and we'll talk a little bit about this in the questions because I saw some of the questions come through on the pause there, is that there's a lot that is pushing in this direction. And as far as a opportunity, for early investors, is the fact that most likely these kind of regulatory scenarios are going to play out in our benefit. And here's what I mean by that is we are getting to really kind of watch this literally, courtside as it's happening. I don't know that especially retail investors have had this kind of able to really kind of understand the narrative, and then also just to be able to see the moves being made. Eventually you'd be able to track these moves all the way down to the chain level. So I think this is going to be something that is actually going to benefit retail traders in the future, possibly in the very near future, as we start to see the market kind of move. I do want to jump to our poll as well. And don't forget, get a question or two in. We'll try to get to as many as we can. And of course, as you guys know, if you guys aren't already subscribed to our Diamond Circle, make sure and jump in on. But anyway, what happens next? Stablecoin regulation, bank crypto custody, SEC, or more crypto taxes? Interesting that you guys thought crypto taxes regulation. I mean, I know the IRS added more people, but reality is that they lost a whole ton as well. I think there was 50,000 people that were lost in the last 3 years. So they added more, but then took away, or many were gone. Plus the growth. I don't know. I think crypto taxes, obviously regulation will come. I don't necessarily think that's going to be one of the biggest ones that hits. Could be a scenario that plays into it. I do want to get to a couple of questions here for you guys. All right, 16-bit. Bicep, Paul, do you think the transparency that crypto offers is one of the biggest reasons traditional institutions are seeking to own a majority of Bitcoin, and then regulation and control of on and off ramps? Well, this is something that has been in debate for some time, is that crypto really isn't that private. Now, sure, it has anonymity to a certain extent, but the wallets themselves, the blockchain explorers out there, absolutely open these things up. Now, the concern that I think banks will have is how these are opened up because of the Privacy Act that mostly governs how banks are operating with your money in your account. And that is something that I think will worry the banking industry, but I do believe that we're going to see a resolution to that and how it plays out. So I don't necessarily think that the blockchains themselves will initially be wide open like that if we ever do see, and when we do see the integration of banks into the ecosystem. It'll be a different kind of insulated layer that I think will play into it. But more importantly, they'll be able to see it. So will the IRS, and so will all the regulatory bodies. Just remember, that, of course, is the transparency of blockchain. Probably, I think, one of the least potential venues for money laundering versus something like fiat, which is the biggest. So it's going to be interesting to watch that one play out. Look here. Let's see here. Jokamak. Jokamak, yeah. Will there be a JP Morgan coin or B of A coin? I think eventually there could be some sort of interesting blockchain play from the financial institutions. I think it's so very early, and also it will depend on how the regulatory landscape plays out. Obviously, the Ripple case with the SEC will start to dictate some of the structure of that, what that might look like. But remember, these guys are, they're just insanely large, so their capacity to be able to do something like that, do the disclosures required, the due diligence, the legal fees, the amount of research and stuff that you would have to put in place to take something like that out, is a real possibility. Ripple will be a crypto bank, question mark. Let's see here. I think Ripple has a potential. They tried, or they started asking questions about Celsius. They may not be interested in that anymore after the most recent findings, but I think if they could have an opportunity, Ripple, to make a leverage into retail finance in some way, in any kind of retail finance, that would be a very interesting play for Ripple, because XRP does have obviously a very significant role in the global financial ecosystem with essentially an alternative to Swift. The likelihood, could Ripple play into this? I think they could. It is a very interesting place. I'd love to see their roadmap. I know it's one that's highly secretive, but I'd love to see their roadmap, because I think they're probably, listen, these guys are smart. They know what's happening right now, and the likelihood is really, it's more about a race to kind of the gold rush right now. It's a race to who is going to be able to offer these kind of financial services available to the marketplace first, and that includes a spot ETF. Salutis, let's look here. Why do people think regulation will fix the industry? The only regulation needed is more details of the internals of these companies being put on the blockchain. Blockchain is the regulation. I would disagree with that in the essence that clarity, well, regulation does require a lot more clarity within these organizations. Example would be if the SEC had truly regulated Celsius, or if the FDIC or the Federal Reserve had truly regulated Celsius, or even Voyager to a certain extent, as a pseudo crypto bank. Had there been that kind of transparency, those would reveal a lot more information to the retail investors and the people in maybe investing in their stock. And I do think that has a big play on where this goes. So I do think regulation is going to be, unfortunately, one of the big scenarios that does have to happen. I know the blockchain in itself kind of self-propagates. Sure, yes, it does provide a tremendous amount of open, transparency to an extent, but you are right. It's still where the people can still hide behind the chain itself, and that is the bigger question and the bigger concern. Minak, how do you think products where they hide blockchain transactions will be affected by regulations? Well, I think you already have seen a little bit of movement right now in a concerted effort to shut down Tornado Cash. I think we'll see more of that going on to the privacy sectors in terms of privacy coins. So that's a concern. I'd love to get some of the privacy coins guys on here and experts in this industry. I know that there's a couple of the associations and the think tanks that are really trying to position for a lot of what happened with Tornado Cash and what this might mean on a global level, because this could start to set a precedence of how this may get regulated. And these are more from a enforcement that kind of forces a regulation scenario. So I think it's very early, but at this point right now, what I'm seeing so far, not a rosy picture. Michael McNeely, AMC recently introduced a token that will be gifted in common stockholders in the movie and company asset. Yeah, we reported on this. We had a pretty deep dive on this. It's a brilliant move, I think, by the CEO there at AMC. And it's a very interesting move because essentially he is creating a tokenized security. And this is something he's been talking about for quite some time. And there's a handful of people that are looking at going this direction. I think the fact that they've done it, it's interesting to me that someone hasn't done it before, but the fact that they've done it, I think will play out. And we do know that it's coming up very soon. Obviously, you'll be able to get APE, not APE coin, but APE, which is, I can't remember the acronym for it, but AMC's preferred, I think, something like that. Equity, yeah. AMC's preferred equity. And that is, I think, is a brilliant play. I think we'll see more companies that will start to understand kind of the dynamic of what AMC is doing and most likely try to do something similar. Kurt, yes, they do want their cut before the regular. I think it's more of a cut they want in the game, because they've essentially stayed on the sidelines for so long, realized that this asset class is not going anywhere, and now are simply trying to figure out the on-ramp. And the on-ramp, they want to make it as safe as possible, hence regulatory, hence SEC, hence FDIC, hence Fed and Federal Reserve, alignment. All right, Daniel, Crypto Wrath. Only reason I'm thinking this way is I believe the SEC Ripple case will determine who they can go after. Yes, of course, once they settle, they will be immediately able to go after an exchange. I would agree. That is already on the table. There's a lot of exchanges, I think, that we probably just haven't heard all the shoes drop. And that, again, gets back to my point earlier, is that if more and more stress goes on to the exchanges themselves, who's going to be out there? I think there's going to be a bank that's going to be sitting there waiting in the wings with a crypto exchange and a secured asset level and an approved Federal Reserve charter that essentially will start to soak up this business. It'll be interesting if we see things like Robinhood, who's getting their DeFi wallet, come in. How would they play into this? Other trading venues out there, whether it's a TD Ameritrade, a Schwab, and all of these that could potentially move quickly into this 24/7 environment, especially as we get around things like tokenized securities and really kind of the future of where crypto exchanges truly are going to reside. Where do you think the market is going in the next 3 months with all these news? Okay. Watch our macro shows, because this is really a big factor, I think, that still presses us downward. That's my thesis right now, is that we are still looking at a downtrend. And it's not that that's a bad thing. I think right now, dollar cost averaging, I look for the red days. I'm always looking for opportunities where you can jump into certain assets. Some assets can move, then they take these little rides up and you take some profit. Do not be afraid, and you should be taking profits even in these periods of time. Look for the opportunity. Sure, there's going to be some dollar cost averaging opportunities in there, but I do think we're going to see more and more of this. Gareth and I kind of break this down on our Markets and Mondays show. We're going to do one this coming Monday again. And we do break these down because he is also in the camp that we are going to see a little bit slower and possibly downward trend, especially on the major assets like Bitcoin and ETH. I'm in agreement with that. Not necessarily thinking that we're going to see an absolute pump in September for the ETH merge, but there could be some things that play that out. We'll see how that all turns out. We are going to give you guys a full rundown on some of those asset classes. Lots more happening this week, so make sure and stick around for those. If you guys are listening in over on the podcast side of things right now, make sure and just jump over here to the YouTube channel. This is the place where you can catch all of our breakdowns, a lot of our sentiment analysis, even some of our trading signals when we do go in with the macro analyst and some of our traders. All that happens right here. And of course, don't forget to join the Diamond Circle. It's really easy. Just click the link below, join, it's free, and get in there. If you guys want to reach me, it is out on Twitter @Paul Barron. We'll catch you next time right here on Tech Bath.